Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Friday, September 16th, 2022. Well, actually, late session, I should clarify. We haven't closed yet. It's 3:36 p.m., and I'm hoping to get this video out to you guys before the close. Just give you my thoughts. And my thoughts are this. I'll just say it up. I talked about gaming this bounce, which so far so good, and it's nothing huge. Wasn't looking for a huge bounce. I think we'll get one last thrust up. This is a 10-minute chart, but what I was going to say is that probably a good time to I threw out several things today, areas to book profits on these index shorts, natural gas, a lot of stuff out there, and just my thoughts are to go very light to flattish into the weekend, and I'll show you why here in the chart. So we'll see. Like I said, this is that point. We're down. We're still down. We're still down about 1% in the Nasdaq 100 futures, which we're looking at here. Today seemed like at least a near-term selling climax. And again, you have to respect these divergences even in a downtrend. So far they played out for most of the day sideways, and we started to move up. And you can see I have two targets are resistance levels here. Well, I have others, but I'm not right now, not even today. What I'm thinking, we get one last thrust up here. We hit that 11,934.25. The NQ is rounding off to quarter points. Pulled back, and we're right here right now. Well, you know what? I probably have to zoom in tighter for you to see it. That 11,875 support right there. And so let me go back to somehow flipped over to two bars instead of candles. I like candles better. Same, you can use either one. And so I think we're going to get some short covering today in a late session rally. I mean, look, there's only 20 minutes left. If it's going to happen, it's got to happen soon. I'll show you. We have to obviously pop those highs right there. If we pop it, we'll just get that last minute thrust up there. And the last of the longs that I have, I already took profits on half there. I'm going to take, if I can get it, the other half there. And if not, I'll probably just go flat. Like I said, there's just no, it's not worth the risk with these big divergences on the 60-minute charts, especially. Something can happen next week, some kind of catalyst, some kind of support for the markets. Wouldn't surprise me before the Fed meeting, so they don't have a big dump right before it. We'll see. Anything's possible. Before I told you I thought we'd see a lot of selling. We did so far. We've gotten a lot of selling leading up the meetings on Wednesday. But all right, so that's it. A little shy of 1193 is what I'm looking at today. If we get one last thrust, get out. Going flat in the weekend, and futures pick back up on Sunday night. We can always pick back up where we left off, or we'll see what happens then. You just have, as a futures trader, I love the futures. I trade round the clock virtually Monday through or Sunday night through Friday, evening, or after the market closed a little while they'll keep trading, but then they shut down. So that's the only time you really have a overnight risk. Any other day of the week, you can have a stop loss order. It can be hit in the middle of the night, limit your loss, and you don't have to wake up to a huge gap down like you do with the stocks and ETFs. All right, and so here's that wedge I'm talking about. This is the hourly chart. This is a bullish falling wedge pattern, and you just have to respect these. Yeah, the trend's bearish, but look, the divergence is confirmed. There's that same 1190 right there, 900. Like I said, maybe get there today before the close to it, get out. But and then if they can pop that level next week, then on this chart, I'm going to give you one other level here. But here's your targets if this plays out. 1290 and then 12264ish right there. Okay, so those and again, that's if 1190 gets taken out. Now look, we're in a sell-off mode. Maybe they just dump this today into the close, or they dump it next week and it never plays out. But I won't stay heavy short with these kind of divergences in place. It's just like I said, me, I went long this morning, so I'm long now, and heck, maybe I'll even decide to take a small long position home. But just wanted to share my thoughts there. Yes, same thing. This is just the short-term charts I've been watching today, 5 and 10-minute charts. There's your downtrend line right there. It's big divergence, just like on NQ. You have positive divergence there. Pop that level. There's your next resistance, 38.9861. And then if we get a nice lift into the close in the next 20 minutes here, maybe a carry up to about 39.18. 60-minute chart, hourly candle, same thing. Big old bullish falling wedge pattern. So, yep, trend is bearish. Maybe it'll get foiled. Broke out today too. So That's it. There's your targets, 39, about 39.90, 39.36, and then 39.80 if that plays out. Um, I could show the same thing on SPY and QQQ and all that, but let's just save time. Let's just get this video wrapped up, get it out to you. What else do I have to show you? Nothing else. I told you, like in silver, like in gold, still hanging in there. Silver is getting close, so we'll see if we can see next week. You know, the currencies will probably chop around for a while, and that meaning the dollar and the euro. But post-Fed, like I said, I suspect in one way or another, the Fed's going to, even if it's subtle, kind of back off their uber hawkish talk right now, whether it's with rates or whether with quantitative tightening or just whatever the market thinks. So if that happens and the dollar continues lower and the euro continues higher, and then silver and gold should continue higher next week. But like I said, you know, gambler can go heavy, long or short into the weekend. To me, it's not worth it right now with the way the charts are. You know, the long-term charts still very bearish. The current trend still bearish. But like I said, lots of divergences. Oh, that's what I want to show you. And one of the other things too, it looks to me today, you know, if you come down here, let's go down to maybe a 15-minute chart. There's that 15-minute I gave you before we hit that measure target on the bear flag. And I've added a few lines since, including divergence here on the 15-minute chart. Support we fell to, a little trend line taken out there. First resistance level on this 15-minute chart, which we hit to the button today, 289.50-ish right there. If we break that, then there is actually one more line that needs to be on this chart that I don't have, and that's right about there, give or take, 291. Oh yeah, here's what I want to show you. Potential selling climax today. When you look at the QQQ 5-minute chart, you see the volume down here. You can see you always get a surge of volume in the morning. It tapers off midday and then picks up. So every day volume will look, these are your daybreak lines. I don't know if you can see them on my chart, but there's the dates down there. And it always looks like a smile. That's what volume looks like. But you can see today's volume this morning was higher than recent days. And so I think what happened, we just had a near-term selling climax. I think everybody and their brother who didn't want to short, back, when we were shorting days and, weeks earlier, they piled in today. And when you look at SQQQ, everyone that shorted the market today, there's where we opened, and there's where most of the trades occurred. You can see the volume price histogram. I'm going to take out to where the big bars are. They're underwater now. And so I think these short sellers, that what I call the JCL, Johnny Come Lately shorts, especially the ones that jumped in today, are going to see they're already going underwater. They got a weekend coming up, and if they sell SQQQ, that in turn buys the indexes as they balance out the holdings on the TQQ, SQQQ, etc. So that's it. And all right, that's just a very micro call, though. More upside today into the close. And then again next week, like I said, we'll pick it up on Monday. That's a good thing, about going flat or lightening up, booking some profits, especially if you've ridden this wave down like I have. That just feels good to book those profits. And I don't care if we gap down 3% on Monday and I miss that gap, that's fine. I can always jump back in if we get into that waterfall type selling thing. But usually you're not going to see a lot of movement. The market tends to go in a holding pattern just leading up a day or two, those couple days, or the 2-3 days leading up to the FOMC meeting. So again, another reason, just kind of purge out, book some profits, and then pick it up next week and get ready to engage maybe pretty hard after the FOMC meeting. All right, I'm going to wrap it up here. Hopes to get the video out to you guys. It's 3:45 right now, so I got to upload it, and as soon as it's able to be played, even in the lowest quality, which is that's the way YouTube renders it, I'll get it out to you. And then, as always, if it's in low definition, just keep refreshing the page or the video. Go to YouTube, and I usually on a short video after about 5 minutes or so, they'll have it in high def for you. Okay, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.